That's cold-blooded.
Yeah, so welcome. Thank you, Cred. I appreciate it enormously, you coming on. I was saying to the guys before, I messaged you late today, and you graciously accepted my rather forced invitations. So a big thank you. So I got no real idea what we're going to discuss. Because when I came on to speak with you, we got a format and we went through, and that was fine. And then when we got a lower time frame trader like Jim on, we can talk about the lower time frame price action. But I was like, I don't know what me and Cred are going to talk about for 2 hours.
Yeah, that's a reasonable concern. I mean, anything. We've been friends for a while. We had a trip back in history today going through Discord, which was hilarious. But yeah, anything goes, really. If you want to do your normal overview or whatever, and I can chime in if necessary or whatever. It's your show, man. I'm here for comedic relief, maybe one bit of insight every 15 hours of content, like anyone knows. And yeah, I'm down to freestyle.
Okay, so we'll take a look at the kind of mid time frame BTC stuff. So mid for me is like 12-hour-ish.
Sure.
So let's just go to chat to kick things off.
Sure.
We'll go straight into... Does this consolidation, let's use Christmas as the region. Do we break up, down, or continue sideways for the next period of time? What does chat think?
How accurate are they on average?
We counter trade the living shit out of it.
Nice, as expected.
Yeah, there's plenty of downs flying in, which, again, I would expect.
Yeah. And you gave them a hint with your tweet a couple of days ago, right? Consolidation.
Oh yeah, but that failed.
But...
We don't it's failed.
Oh, we didn't talk about that. I thought it was still intact. Or was it a lower time frame? Oops,
no.
I'm already throwing you under the bus. That's nice.
Yeah, no, the line wasn't correct. Price hasn't really done a lot. We're probably at like exactly the same price point, but yeah.
Just the same price point, just 10% off your account, right?
Yeah, exactly. Yeah, just chopped to shit trying to trade it. Yeah. Okay, yeah. So plenty of down. So down seems to be the way, and I would tend to agree. I would tend to. I've seen a lot of people on Twitter discussing this on here and looking for the bear market rally, the short squeeze, based on the fact that obviously we've got all of this above us, and probably more realistically, we've got this above us here that people are looking for. But I think probably the key issue is that we've also got this here, so that kind of like limbo position isn't really too helpful, and those people looking for the short squeeze I think should also be quite aware of what is below us, which looks equally appetizing to try and move to and take out. If it was a gun to head scenario, then I'm betting downside here, but I can see a situation in which we just range. But given the fact that we've got news consistently every fucking day, there's a new rumor, there's a new insolvency, there's a new issue, and obviously the one at the moment is Genesis and everything that is revolving around that. But what are your thoughts on, or do you have any thoughts on that side of things in terms of what the situation is, as though I'm expecting you to have some sort of answer to this
today at 9?
Yes, yeah, exactly. You're going to break it to us now, the exact outcome. Or maybe more generally, what does contagion look like? Are we at a point where like we've figured that out now, or are we still in the unknown, who the fuck knows who is affected and to what degree?
Yeah, I think it's more the latter. I think the big ones have obviously folded, but we still don't fully know. And one of the indicators I use for that is if you just look at how Genesis has been communicating throughout this, it's been a bit insane, right? So on the day of the Binance LOI, they're like, yeah, lol, we're fine. And then they're like, okay, the next tweet a couple of days later is like, okay, we have 18 mil exposure, or like even 1 mil, some paltry number for them as the biggest lender in the space to Alameda, and that's okay, we'll deal with it. And then the hole gets slightly bigger. I think it went from 1 to like, oh, we've got like certain funds left on FTX, but don't worry, we've written it down. And then suddenly it's like, by the way, we're pausing new loan originations, withdrawals, and we need $1 billion. And that all happens in the space of 5 days. Yeah. So clearly, even they didn't know what the fuck was going on, or misjudged their portfolio and its liquidity and so on and so forth. And so we simply, like, if they don't know, then what chance do we have?
Yeah.
And there's all sorts of dodge. Like this, the issue is, this is like emboldened conspiracy theorists on crypto Twitter, and that's not a pejorative that I use lightly, but everything that possibly could have gone wrong and everything that kind of looked dodgy all ended up being dodgy. So now when they say when there's smoke, there's fire, now it's like where there's trees, there's fire, right? People look at anything, even things that would be completely ordinary under normal circumstances, and it's, look, this is implicated in this whole contagion cycle. I think it's spoken to how incestuous crypto credit markets have been throughout the bull market, because you knock one domino down, it's like that meme, the entire thing comes crumbling. And there is something retroactively fitting about Barry being the one to tweet that there's like a daisy chain of lenders, and if one goes wrong, they all go tits up, and now he's the one being quiet during what should be a good week. So on the contagion side of things, it's not immediately clear to me that's over, and the market doesn't seem to be particularly confident in that as well. If you're making from price action, a lot of really clever quant trading firm people like MGNR and others, they've literally reduced all of their counterparty risk. Like, they're fully in bank account fiat, because the cost to uncertainty or the cost to being wrong in those scenarios isn't just like you take a haircut, it's your funds get stuck. And that's a pretty steep cost to consider. So in terms of the spillover contagion stuff and just the bad news, and that's only crypto specific bad news, it's sort of entirely clear where we are. And I'm still very skeptical. If Genesis is in trouble and FTX blew up and all these centralized exchanges who had products under that umbrella like Gemini Earn, etc., if they're like sort of in trouble, why we haven't heard anything really from the B and C tier exchanges who still have funds? And we know, like, for example, when Luna blew up, it took weeks and months for a lot of those to come out and say, oh, and by the way, we're pausing withdrawals because we're all in on UST. So I hate this type of environment, very like headline driven, mass skepticism, and things change so quickly that if you read Genesis initial kind of press and public release, then they said they were completely fine, and then 2-3 days later everything's frozen and they're looking for $1 billion. So even when you do get what should be reassuring statements, it's obvious that you can trust them. It's a clusterfuck.
Yeah, like, it feels as though right now we're basically in a situation where we basically have the Wall Street cheat sheet, but for tweets of funds and companies. So it feels like everybody's going through the same cycle. It's like we're in the like we're fine phase, and then it's that we've got the some exposure phase. Then it's like okay, we've got maybe more exposure than we initially thought, and then it's like we're in the fuck stage. So like we seem to basically have this like cycle that everybody seems to be posting under. And again, I think it's probably because of that kind of where there's smoke there's fire analogy, in which at the moment Twitter is absolutely playing the role of detective and sniffing out every single potential issue point or pinch point in the market, and therefore a lot of these funds are coming out to address it, and their first priority is to firefight to some degree, because otherwise it's very much an environment where once people get a sniff of something, they're like on it. That's it. It's like it gets pursued. We saw that a little bit
on
with
a
FTX.
Friday night, mate.
Yeah, that's a very good summary of how things go down. Yeah, we saw it with FTX when the first kind of news started breaking, and then all of a sudden everybody was like looking into the wallets, and they were reporting how much they had left in stables, how much they had left in like BTC, and that issue doesn't really go away for them. They're obviously companies now are trying to get themselves out slightly, and also use the domino effect meme with the smallest domino. And basically the smallest domino in this situation is the bull market, right? That's the one that started everything, which is crazy to think that's pretty much the kind of starting point for the fuck ups with the greed and everything that transpired during that period and the push for more.
And Do Kwon was right. That's the scary part, because he said before Luna blew up that we want to get to a point that if Luna fails, crypto fails. Now, presumably he meant that it becomes ubiquitous throughout the crypto space as the go-to stablecoin and just ecosystem or whatever else. But what it's actually meant is he's right, just not in the way he thought. That entire debacle caused such a rapid unwinding and leverage that we're still feeling its shocks to this day. Like, we know that Genesis was doing a ton of those UST, BTC conversions on behalf of Luna. They lent a ton of, I think like 230 mil or something uncollateralized to 3AC, who were levered to the tits and all these ARBs. And so, yeah, he was right, just probably not in the way he thought, which is depressing. He's Karl Marx's quote where there's a specter haunting Europe, the specter of communism or whatever. We're still being haunted by the Luna debacle to this day, which is unreal.
And the other thing is, I think that I remember him talking about, do you remember when he like went on his BTC purchasing spree? And I think he made the line in there, which was essentially, we want to be at the point where basically if Luna fails, then BTC has failed, right? That's what he said, because that's how twined he saw those systems. Fingers crossed he doesn't continue to be correct, and we look back at that and think, oh yeah, of course, he was actually the prophet after all. He was the one who was telling us the truth back then.
Yeah, the whole thing is crazy, but I think like some perspective is helpful because what's essentially happened this year so far, and it doesn't seem to be quite over yet, is that the entire industry is basically we've hit a big fat reset button on it, right? All the incumbents, all the big funds, all the biggest firm, all the leverage that was built up in the system, all the levered arbs that were keeping the bull market running, the GBTC arb trade that was funding all those yield, the concept of crypto native yield in general, like the entire thing has basically been fucking wiped out. Now, if you're looking for cyclical entries or kind of run it back type of structures, that's about as ideal as it gets. Now, obviously, there are likely to be overextensions. There are costs to that because the way in which that leverage got unwound, where there's a ton of fraud involved and there's now like a reputational risk for those institutions being associated with crypto and harsher regulations and so on and so forth. But if you really care about the space and you have like a multi-cycle perspective, the likelihood that you would get these conditions and sort of these prices under even semi-ordinary circumstances, pretty fucking low. So if you joined late and you saw trillion market cap BTC and all these crazy valuations that made it pretty difficult to get on board, just like on the low time frames, you isolate the periods where leverage gets flushed out, and as long as it's in tandem with the larger trend, those make for entries you wouldn't ordinarily get. So someone else's greed falling back on them is opportunity for someone else. If you transplant that on a higher time frame context, that's what our industry is going through now. Now, yes, it's likely to, as I said, to be a bit worse, and the cost of that is a bit steep given how we got there. But overall, like if you give a shit about this space, we're pretty in a sort of very bittersweet and twisted way. If you still survived, you're lucky to be here. Not to mention, how you and I are similar ages. Realistically speaking, how many really extreme tightening cycles like this are we going to see in our lifetimes? 2, right? Maybe 2, maybe 3, maybe 0. It's going to be some low number. If you look at any of these macro podcast newsletter things, all the reasonable analogs that people make with the last time this happened is like 1970s or 1950s or the Great Depression. All of that is a bloody long time ago. So you have this consecutive black swan bizarre type of situation where a bunch of stuff happens that doesn't ordinarily happen and is unlikely to happen again. And the net impact is it just basically blank slate, tabula rasa for our industry, fucking resets everything. And if you still have money, which is in itself an impressive achievement, and you care about the industry, like your people will call you lucky next cycle if, God willing, there is one.
Man was going off. You did a very good summary then. I didn't want to interrupt. I could tell you were in flow. But that was a very wonderfully put piece. People are going to summarize this as basically Cred saying buy now. That's the summary you're going to get from it, Cred, is this is Cred's buy signal. Like, I agree in terms of, I agree. We have a lot of people, like Jim, for example, is a very strong believer in the fact of, look what we were fortunate enough to live through in terms of the bullish conditions. Right, so that was a unique event, and one which, again, you would question how many of those types of bull markets do we see in a lifetime, you know, given the conditions that were at play there and the amount of very publicly noted buying that was happening by far wealthier people than us. But I think you're also correct in terms of what we see in terms of the downside picture and those events being something that we reference that are decades apart. So yeah, so I think that's equally important to balance out the kind of, it isn't going to happen again from the kind of the bullish perspective. I think it's also important to note the strength of what we're seeing now in terms of conditions. And again, not saying that we're in the clear on that side of things. We know that can take a good length of time, but I think it's still absolutely worth noting the kind of occurrences in which you're referencing of similar bear market events and playouts. So
yeah, they're both pretty extreme by definition. So that's why I don't like people blaming leverage in hindsight. Because as the great thinker of our times, Sam Bankman-Fried said, and he's argued this point before, which of course aged terribly, but I think his argument is correct, that you can't just simply blame leverage when you get the downside from it and not account for all the upside that it offered you. So part of the reason we got to those insane valuations is because we had very accommodative, to put lightly, monetary and fiscal policy, but also within crypto credit markets, borrow was like very cheap and very accessible. And it's those kind of firms, individuals, entities, whatever it may be, getting levered to the tits that actually creates the volatility and the insane valuations and the momentum, reflexivity, liquidity, all the stuff that we come to enjoy as traders. And you simply can't have one without the other. Up only equals down only eventually, and you have to pay for the craziness that we had in 2021, and we're paying it for it now, admittedly, again, in a slightly more extreme fashion than I would have liked. but it comes around full circle. And that's why I have a very unpopular take when it comes to people being like, look, the CFI side of things is so opaque and there's a complete lack of transparency there. All these OTC desks, lending firms and hedge funds, whatever. We just need more transparency. We need a shift towards DeFi, permissionless protocols where you can like see all the data and audit it in real time, etc. I'm not entirely sold on that because I personally like my credit markets to be a bit shady so that degenerate sociopaths can put on a ton of leverage and put some pump on the damn coins. So that there's, in my mind, at least some sort of balance. I don't need to see how the sausage is being made, so to speak, as long as what comes out is edible.
I was waiting for you to end with the term edible. So yeah. The situation
the market
that
disagrees.
The market is. I had to mute myself because I started laughing halfway through as chat was just going, "Stop fudding, stop talking." So you're like reminding the market of all of these things that it did. Yeah, everybody's stop. Yeah. So in terms of the lower time frame price action, I think we're pretty reactive on taking the lows so far. Again, you're taking this cluster of lows here, and there's a very badly drawn arrow here. And we got the relatively decent kind of bounce and wick up from that. And again, we're taking now this low down here. So we'll see the reaction on this. But right now, pre-futures open, it just feels as though probably aggressively seeking these regions in the PvP battlefield that we are currently embroiled in here. So we'll wait and see, obviously, how things develop before we all start panicking and blaming Cred for the true breakdown of BTC here.
Yeah, that's very fair. I also think one thing I've catching myself on is that macro still matters, I think, for better or for worse, maybe for worse. But because we had so much like crypto specific weakness and contagion and just a complete implosion and crazy headlines, a lot of people have basically forgotten what one of the largest drivers of flows this year has been and will continue to be, which is the macro stuff. So while it's been very tempting to just focus secularly on crypto and the narratives and who's insolvent, who's wrecked, who am I retweeting this week for clout, who's going to be the person sharing disinformation to then shill a ref link sort of 20 minutes later or their NFT collection 2 months later, I want to I remind myself to have to zoom out and look at the macro stuff because it still matters. And my assessment of that relationship has been that part of the reason when, you know, a lot of very intelligent people who've started like buying spot here, scaling in or whatever, usually having sold at much higher prices, they're saying, why aren't we at lower prices now? And is that sign of relative strength? Because given the magnitude of the implosion, all the contagion, and just the amount of capital wiped, surely the fact that we're not lower is in itself indicative of relative strength, which therefore is maybe worth punting from the long side. I don't have any immediate issues with that argument, but one potential response could be that the reason we aren't lower is because risk indices have been absolutely carrying us. And whichever kind of correlation trading bots that haven't already been carried out completely or have their money stuck on some FTX API, that relationship still seems to be there. Instead of completely nuking much lower, because legacy was strong, that kind of held us up. And I think even any intermediate pivot in risk indices to the downside or pullbacks or ranging, anything basically other than the more or less up-only price action we had coming into the event, that might cost us a little bit. And it's obviously a bittersweet observation to make, because in the absence of this type of implosion, you saw the performance across S&P and NASDAQ. They just completely tore faces. My guess would be we would be roughly at high time frame range highs in crypto if we had the privilege of participating in that correlated rally. You know, 1900, 1700 ETH, 25k BTC at the range highs, something like that. But instead, obviously, we didn't get that, and we're now fighting for our lives, so to speak. So I think one thing that we'll see become relevant again once the short-term insolvency, contagion, etc. headlines die down is people will go back to what's been driving the market for much of the year, which is correlation, S&P, macro, inflation, and all this type of stuff. I don't think just because crypto blew up that those things become any less relevant, with the minor proviso that I think there's some sort of inverse correlation or the relationship between decoupling and crypto. I see it in the following way: the lower prices go and the more depressed market caps we have, the higher the likelihood that we do or can see some sort of decoupling. Because at a certain point, if you want to push around the $1 trillion asset like Bitcoin at the highs, you're going to need a lot of money, and that's pretty difficult to do. Whereas if it gets more depressed into much lower market caps and valuations, and we know that liquidity profile sucks because all the market makers have been carried out, recalled their loans, and they're not quoting as much as they were in the past. I think at those lower prices where stuff is more likely to break, that's if you're going to make an argument for a decoupling, you're going to see it at the extremes, or certainly it's easier to do the lower price goes. So macro still matters. It might start to matter less if we get to really kooky crazy prices, but I'm not comfortable just simply ignoring it on the fact that crypto has been in all the headlines. It's still important in my estimation.
Completely agreed in terms of the macro side of things, and you're absolutely right in terms of the protection from the kind of risk markets in general and the indexes and the way that they've been performing. When I came to speak to you I was very much in things look good, bear market rally, preparing for higher prices, everything is shaping up really nicely. And the indexes and the dollar have done exactly what I thought they would do. And obviously our market has suffered greatly given its internal issues. But overall, I think that risk markets, the indexes still look decent. And I'll take a quick look at those in a second anyway. But I think they still look in a really good position. But once again, then point turns to what you were discussing in terms of the macro picture, and their rallies will come to an end. And then once the pressure of those markets starts turning, and we start to feel that in crypto again, the situation will turn back to the macro picture. Everybody basically forgot the fact there was a fucking CPI print in the middle of the meltdown, right? Everything was going on with FTX, and we had a CPI number in the middle of that. And again, those numbers will become more the focus of the discussion. I say that, I don't know when the news stories are going to end on crypto side, but yes, agreed in terms of when the macro picture maybe starts to swing back for indexes, then we will start to feel some of the pressure. But I think when people are mentioning the relative strength of crypto, it's or that we should be at lower prices. I've always had an issue with that thought process anyway. I understand the arguments in terms of some of the biggest kind of negative events that have come out of this space in terms of customers affected, reputation, given the way that crypto is far more mainstream than it was certainly back in the GOX days, right, when it would have been a similar event in terms of that lockup. I always find it strange. There's a number that people have that kind of flicks the switch of it's not as low as it should be, or it's gone too far down now. Like, that number is obviously just a super interesting point that will vary between people. On 16k, it should be much lower than 16k. We are down nearly 30% from where this incident started, which is still significant, but it's like people pull out a percentage that we should be lower as a result of the events that happen. So I always find that way of thinking obviously super subjective, but then also super difficult to rationalize, well, what does that figure look like, and where are we happy that we have now sold off to a degree that represents the level of severity of the event that we've just witnessed. It's an odd point I find that people make quite often. It's super subjective.
For sure. Yeah, my other objection to that when it comes to that type of reasoning, of course, is time. So the market literally just broke down from a multi-month consolidation, and there's no clear signs of absorption or any type of reversal or anything meaningful, technically speaking, from that breakdown. And people are just immediately horny to argue that this is relative strength. A cursory overview of the last year, anyone who remembers the decoupling trade, that's been one of absolutely Hall of Fame, the worst trades to be in for the entirety of the year, where the S&P would maybe go down and crypto would go up for a day, or even like a trading session. Maybe the S&P is down 2% and crypto is up like 3%. So people have been incredibly horny to embrace a decoupling type of argument. And to do that, they've embraced a very low kind of threshold for what triggers that, both in terms of price, so relatively minor decouplings have been enough to get people excited, and also in terms of time. Instead of looking for a daily, weekly, or multi-week type of secular decoupling, for them, one session, one candlestick, one day, one open has been enough to make that argument. And it's just aged completely terribly. And that personally has made me very defensive, that if I'm going to be making an argument for relative strength, my threshold for time at the very least is much higher than it has been for the entire year, because people who've jumped that gun early have just not had a very good time. And I don't want to join them in the graveyard, because that's a very tall pile of bodies at this point. And this sort of reminds me, we have technical analogs to support this. Both this year, after 30k broke down, the market did more or less nothing for 3 weeks before you got the larger continuation. When 6k broke down, I think that there was like a week or two there where the market stalled in the 5ks
at least,
before halving. Right, so there isn't a lot of evidence to suggest, like purely even on technical terms, when you get a large break from balance after a long consolidation, you've got to be bloody careful if you're fading that, unless you've got very good reasons to do otherwise. And then if we look at specific examples beyond broad technicals as to when has crypto responded well or come back to retest those levels or done whatever else, I think the evidence for that is quite scarce. So I'm definitely not feeling rushed to fade this breakdown. If you've got low time frame measures that allow you to do that and intraday setups, I think all of that is great. But like bigger picture, I just don't think we have neither the price nor the time to convincingly make the argument that there's some sort of relative strength there, at least not for my liking. It's a tad risky and a tad premature. But that's, as you said, it's very subjective.
Yeah, like I replied to a tweet of Don's because I thought he did a relatively decent kind of thought-provoking tweet on it, which was just throwing a number of things out there. One of them was like, why aren't we lower? Are we factoring in contagion, or have we still got more to go? So he just like threw out a couple of points I thought were relatively decent. And I basically included that weekly breakdown chart in terms of saying, from like just a pure TA perspective, this is the first step in that kind of expansion move that we get the breakdown. So if we forego the news, obviously the events have driven price to where it is, but it's still a breakdown from the range. For kind of the concerns about where we are now and whether or not it's the bottom or whether or not we should be lower, we're week 1, about to end week 2, the first kind of week after the breakdown. And really, it's been a pretty pathetic week in terms of price action and where we've traded to and from. But the reality is that we're still broken down from that major consolidation zone. And it could just be chop until the situation worsens, or risk markets turn around as well and apply that additional pressure, and then we see the continuation of the move. It is a situation obviously right now from a TA perspective where we would just look and we would say breakdown, expansion, sit out, wait for the move to conclude, wait for a range to develop, whatever it might be. But certainly not in a position where I would be comfortable saying, why aren't we lower, as though the move has concluded in some way. Week 1 has concluded. Week 2 is about to conclude pretty poorly. It doesn't really matter what this week has done. It's done
nothing burger, like an inside week, and everyone's
just
shitting themselves.
Nonsense.
Basically.
Yeah, so I think that kind of that true test is to come. And I think it's also because everyone's so hyped up, obviously, right now. Twitter is the place to be. It's the stuff that's where all the info's come in. It's no one's looking at a chart anymore. You know the price by just looking on Twitter.
Yeah, that's absolutely true. I remember when the 2018 breakdown happened, the prevailing sentiment at the time was like, oh, 6K is such a big level, we'll poke below it, maybe to 5.2K or 5.5K, and then we'll get back up and the bull market will continue. And that's obviously not how the market resolved. I remember vocally arguing at the time that, look, if this 6K breakdown, if it really sticks, we're fucked. So why don't you just wait and buy above 6K? And that'll probably be a much easier trade than sort of fiddling around below with no structure, no edge, or whatever it may be. And that's how the market unfolded. I think you can extend that analogy to up to present circumstances and basically say, look, we have a multi-month consolidation where the market was balanced. It broke from balance. Generally speaking, the way I approach those situations is I either wait for price to stop being or not be accepted below the range low. So any type of standard failed breakdown, reclaim setup or whatever, then you have good evidence that that breakdown isn't going to stick. Or you actually let, as you've been implying, the higher time frame breakdown unfold, and that will get you to much cheaper, much fresher, much better structures. And you get to trade the first test, best test of those. But diddling in the middle and jumping into the market immediately post breakdown, like, you better have a really damn good reason to do that. And at least for me, with my systems, my indicators, parameters, whatever it may be, that's not currently available. Now, maybe I'll change my mind this week. We have a move below previous week's low, and you have a ton of buying and like a failed breakdown on the daily, 4-hour, whatever. I can start to say, hey, look, someone isn't letting this breakdown go. And we can look towards medium time frame trades from whatever 16s up to T19 and so on and so forth. But there simply aren't enough damn candlesticks at the moment to make that argument available, at least for me. So if you go higher and don't invalidate the breakdown, I'll do business. If you go lower to better levels, I'll do business. But immediately post breakdown, in the absence of those things and in the absence of compelling type of lower time frame structure, you'll forgive me for not being interested. I think that's at least my view at the time of recording.
Yeah, I would absolutely agree. I'd also say even if you switch higher again, it's like the monthly, the picture like kind of worsens again. So weekly and monthly are horror pictures right now. The weekly representing the consolidation breakdown and the monthly obviously supporting that. And the monthly also still having plenty of room to move until we reach something significant aside from the thin air to the left-hand side of the chart. So I think the higher time frame you go should help to relax the kind of the fear that you can experience from being on Twitter all day about kind of people talking about buying, people doing this as an opportunity. Like I said last week, I think, or maybe even the week before, it's changed slightly now because we've had a little bit more time pass, but just generally speaking, the people who are making you feel FOMO about right now and whether or not you should be purchasing or not, or whether or not you should be getting a spot bag or just buying flat outright, whatever. It's like a lot of these people would have said exactly the same thing after Luna. A lot of these people just use larger events and the kind of cascading sell-offs as the opportunity to be like, this is a dip buying moment. Hope you're, and like really those people will unfortunately have like multiple instances of which they will be buying that will be significantly underwater by the time the selling is done. That's just the way it's always panned out. But I think the higher time frames obviously represent a degree of this looks fucking terrible, and the lower time frames continuing to not have a nice time at the moment anyway. Price pretty poor with 5 minutes to go on the hourly, but moving down towards this area now, obviously all being taken. Next low being at 16,150. So we'll see where we end up in the next sort of hour and 5 minutes. I don't know where futures close this week. 16,530, so we're going to be gapping down. We were right up in the range, so we're going to be gapping down on that unless there is a significant turnaround in the price action that we see now. I'll quickly just dive into the X's quickly just to give everybody an overview and a coverage of those. I think 3,900 on SPX is a really important level to hold, and actually we did a relatively decent job at the tail end of last week. Thursday was the correction day, Friday was like a mare day, attempted to rally, failed, and then clawed it back towards the end of the session again. But holding 3,900 is pretty decent for the S&P through here. If it can hold that, then we're still looking for another leg up here in terms of most indicators, RSI, Awesome Oscillate, all in really good positions on the higher time frames as well. So looking for continuation of the rally when it comes to the indexes. Particularly important to hold 3,900. We can look at that bias flip and change below 3,900. I think that's going to be significant. And then we also have kind of the meme line that's been protecting the X downfall through here as well. So each one of these kind of rallies that we've seen has been failing in and around this kind of trend line point. And at this point, it's really just to give a rough estimate to an area that we should maybe take into some consideration, especially if that lines up with some of the overextension on the oscillators, divergences into that region, etc. But for now, I see everything okay as long as we're above 3,900. And the NAS is the same at 11,600 basically. It's just holding the former high. And as long as it continues to do that, then, you know, again, another market looking for upside in, which is a bit of a shitter given correlation trade and everything to do with that in the situation we find ourselves in. And the dollar hanging around below the 108s is also a really positive situation for the risk markets. The dollar is still continuing to struggle. We've had a 4-hour divergence at the lows, played out, ran straight into the resistance at 107s. And now in a situation again where we're looking to break through that. But even if we do, we have some major resistance just slightly above us. And then the metals, just while I'm on the streak of kind of covering everything off, metals have seen their correction. Silver ran into its most significant level last week. We ran into the 2215s, which are the real bullish marker of the silver market right now. I think 2215 is such a significant level for us. Decent rejection so far, but really this is a market that did overextend on most kind of mid to high time frames. And so I think this pullback is still okay, but looking to make sure we hold on to the low 20s through here. If that situation is compromised, then we're probably going to end up ranging between these two areas again for a little bit longer. Where silver looks really nice is so with 10 days left on the monthly, then we are looking to get above that 2215. Still represents exactly the same point on the monthly as the weekly. The reason that I like this so much more, or so much in general, is just because we've had this retest down here. So we've had the breakout of the range. We've run it up during 2020, consolidated a bit. We've come back down to this original breakout point, which is still essentially the bullish retest of this point. And then we're trying to basically look at running it up to these higher numbers. But in order to do that, we need to be trading above this 2215. So rejection week for silver, but I don't think it's really the end of the world. And I'm still kind of very focused on the silver market in general. So across the board, I think indexes risk still looks fine. And again, it's what pisses me off about our situation is that crypto would have been in a pretty fucking good position if it wasn't for the internal clusterfuck that transpired.
Instead, also, what on earth first of all, on legacy, I completely agree with you. 3,900, good pivot for the S&P. Nasdaq also, as long as that breakout doesn't fail, it looks fine. Dollar for me is at an area of weekly structure around that 106 handle, basically the little consolidation, those pre-breakout type of demand zone, if you will. That's the only thing I've got my eye on if it's going to tilt the balance. Basically the base of where the market is there. Yeah, exactly. There's that little cluster before it took the market through the box you've got there. Yeah. So
and
that
then,
to me looks
that's
like
our
a weekly
low,
retest.
and then we've got this. We basically just got this inside here as well. So we're basically just dipping down into this zone, and then
Look, in worst case scenario, that's just like a bullish retest of trend retest on the weekly that then slowly starts to grind up, and that's your kind of higher low into a higher high. That would cook us, I think, and that would definitely be a precursor to a legacy pivot. So I think I want to see that weekly structure fail and create the type of deeper dip you're eyeballing on that monthly and whatever else. But I'm just acutely aware that it had one of its biggest down days in a long time when it fell off the highs, and now it's in an area of weekly structure. As long as that doesn't cook the 3900 pivot on S&P and the breakout on NAS, it's fine. But if it starts creeping up, I'm definitely getting brown underwear.
I think that's probably the situation. I think the 3900 should be relatively important because the correlated trade in that is that if 3900 is lost, then the dollar is probably trading above 108. We have the resistance break on the dollar combined with a support break on the indexes, which is what makes it such a lovely environment on that side of things in order to trade right now. So again, it's one of those moments that you can either look at the dollar chart and know exactly what the S&P and the Nasdaq are going to be doing, or vice versa. So I think it's a decent summary. And actually, the dollar has responded relatively well to monthly divergences. Pretty much every situation here, you've got triple divergence here, you've got your divergence here before the failure and this fake high, and then even looking back across this region here, we've seen significant moves. The only times that we haven't are the 1980s, where we had a very long divergence before a blow off top, and then the huge unwinding of that into the late 80s and early 90s. But in terms of where we are now, we're kind of in the position where we would look at this from an RSI perspective, and we would begin to think about the potential for a monthly divergence. And the reason that we would do that at this point in time is because of the position of the RSI. So we try and be a little bit more proactive in our thinking about RSI, and whenever we see the RSI or a market pull back in this way, then one of the situations, obviously from a divergence perspective, is we like these nice little dips between the points of measuring for our divergence. So once we get a pullback and the market has corrected, we start thinking about the potential to do this and giving us that divergence play out. So we are definitely at kind of an important area. And if the dollar fails here, then obviously the next important area is down at the 50 for us, which would be a full reset. And we would probably have seen a significant rally in equities if that situation unfolds. If we get monthly bear div up here, then we're still in for a good 4, 5, 6 months of some pretty rough times for risk here if this trend just continues. And it is a raging bull market, so chances are we continue to fight in favor of that side versus being the contrarian, especially against the macro outlook that we're in.
Yeah, I think that's right. That sort of divergent leg would be very scary, I think, because the monthly perspective would be that this is the type of thing that would cook it. So it'd be bittersweet because, like, probably given how effective the divergences have been, there's something meaningful going on. When it finally blows off, we can get a bit of a break. But then the question is, while that high forms and the lower high across the RSI, what's the cost of that leg?
Exactly.
And that might be quite scary. One structure that's been giving me a lot of sort of mental friction is actually ETH, because it's done a couple of things that Bitcoin hasn't, and that's left me guessing.
Talk about the low,
but also the general divergence in weekly structure, because ETH did two things differently. The first is actually had a counter trend rally when equities rallied. So Bitcoin only had a stutter step up to 25k and didn't do shit, whereas ETH went all the way up to 2k on the back of the merge, and that was actually like what you'd expect in line with risk assets doing well. But now the issue is if in that 1.1k range low, maybe higher low if you squint and turn your head type of area, while Bitcoin is in free fall. Now that type of divergence makes me uncomfortable. Whenever this types of shit happens, my brain is always, okay, is this like a relative strength because it hasn't folded over yet, or is it just lag because it's going to fold over later? And answering that question has always been very tricky. Like on the macro side of things, in terms of decoupling, the answer has almost always been lag, not relative strength. So maybe you apply that prevailing bias and employ that framework, which I think is reasonable. But like for me, Bitcoin is broke down clearly below its sort of June lows and is in the middle of nowhere, whereas ETH is still holding that type of structure. And ordinarily, when it comes to these market corrections, the reason what makes it more difficult is that Bitcoin will correct hard and ETH will follow and usually overcorrect, right? Bitcoin's down whatever 60, 70%, Ether's going to be down 70%, and then you run it back from the lows and you expect a higher performance or like beta effect from ETH. In this case, I don't know what the exact proxy for it is, but we don't have that same type of structure. So in terms of trading it, a few scenarios come to mind. One is simply breakdown selling ETH if it actually breaks down, and then you anticipate the catch up and the flows would reflect that. The other would be, because if it is relative strength, you can always wait for Bitcoin to actually be bullish, be that a failed breakdown, hit support, whatever it may be, that would give you a bullish directional high time frame bias, and then express that view by being long ETH. I think that also makes sense. But in this interim scenario where Bitcoin for me is in the middle of nowhere and ETH is at structure, but it quote shouldn't be at structure, that's what gives me some uncertainty to not trade this structure, which I ordinarily would do. I almost want it to dump, because then the market would at least be clearer in terms of how that's going to resolve, rather than hang around the lows and make us question, is it relative strength or is it lag? That's much more ambiguity than the correlation that we're used to.
Yeah, and firstly, I'm aware that I could pull up the ETH BTC chart for this, but I think comparing the USD values is relatively interesting in terms of the points that we've had. And you're right, this is something that I discussed when I came over to speak to you, was the fact that ETH has looked better and still gives that vibe through this region. It's the kind of, we were discussing it in terms of if the market went to that higher high situation at the time, as I was driving the upside potential for the market, ETH is the one that would cause a problem then as well, because ETH would have changed into a uptrending structure on the higher time frames versus BTC that still wouldn't have achieved that. And ETH also gives a kind of a bit of a headache through this region in that, yes, it hasn't taken any of the lows so far, and that sort of $800 area still stays protected as it has done. And again, that's not to say that that's always going to be the way, and Cred makes the very good point, which is that ETH tends to play a very nasty catch-up cycle when it finally goes. Right? We've seen it on a few instances before, just overextends. It just decides that an extra 20% on top of whatever BTC has done is fine, right? It's just, yeah, I'm just going to completely puke off the face of the earth here. But it is certainly at a kind of a headache point for like trading it and thinking about the way that ETH is performing through this region. And it's not the only market that's like this. The major one as well is BNB. So BNB is also like acting obviously completely as an outlier to the market, but also has done for a while. It's not just in the recent events that this situation is unfolding. It's been that way for a while. I did a tweet, I know, maybe a couple of weeks ago about BNB, FTT, and Tron. And they're three markets that all held their weekly levels when the other markets lost them. And I thought it was super interesting that the three people behind that were basically three of the most vocal people in the space, right? To have Sam, Justin, and CZ whose coins have held the weekly levels, it was a really good point. So BNB is one that's an outlier. FTT, obviously, we know has now completely puked and obliterated.
Outlier as well, right?
Yeah, it's an outlier as well in terms of the fact that it's zeroed. Yes. So FTT was another one, and then Tron chart is the work of insanity basically, but Tron has now broken through that weekly level, which again, it's held up since 2021, March 2021, so 18 months above this level, and this is the first weekly close below it. They're interesting markets. BNB means that we'd be left with kind of one major that has still held on to its support, but again, it's relatively, I think through the lower time frames, there's also a really nice level, where we currently are basically. So right through this level here is also very important for BNB. It's just held up time after time, and given the recent issues as well, this kind of 265 zone is doing a good job of holding. We'll see how the next hour and 50 minutes decide to turn out for this candle as well. But interesting market, the way those outliers have developed, and some of those coins have held up, and ETH is also doing like weird things. For me, it just adds to the environment of, fuck, it's really difficult to trade this. And somebody said, how significant do you think the levels are when the news is driving so much of the
what the fuck? I hate that type of reasoning. Those questions are really silly because I'm sorry, this entire fucking year has been news driven. So what are you going to do? Not trade? If anything, like, yes, if you want to be reasonable, you can apply certain news filters to your trading and say, I'm not going to trade immediately into the event, or I'm going to have a higher awareness that because the books will be thinner and fewer quotes on the book, that it might move more. I won't employ as tight of a stop. But if you simply throw the entire baby out with the bathwater and say, I'm not going to trade my levels because there's news, then go take a fucking holiday because the entire year is going to be news and has been and will probably continue to be. That's just completely unviable as a strategy, that there's no point employing that type of framework unless you want to admit that you don't have an edge and your levels suck and the news keeps completely butchering you and carrying you out, in which case it's a completely different dilemma to deal with. And so, like, for me, your edge is derived from the levels. So you've got to trade the fucking levels. And if you have news, guess what? That's simply another variable that you incorporate into a sort of process which should confer an edge in the first place. If you're the type of trader who thinks that you can ordinarily trade levels and then suddenly a couple of headlines fly around and you get carried out, then you probably didn't have an edge in the first place. Like, minor adjustments, fine. Some people actually benefit from having the news when they trade levels because that added volatility, if it takes place in the appropriate context, can actually improve and increase your edge because the volatility increases around those times. All of those are far better solutions than being that baby who starts crying, oh, all this bad stuff's happening, none of my levels are working. Well, maybe your levels are shit. Maybe your entry triggers are shit. Maybe your execution is shit. Maybe you're a shit trader because you didn't bother to revise your system, review your trade journal, see the impact that news is having, be more selective with the timeframes on which you engage the market, any of all of the above. So whenever I see this type of thing, like extraneous event happens and therefore the core of my system is no longer valid, then it's not the extraneous events that are the issue, it's the core of your system that probably sucks. I don't know, I really like that's not it. You're looking in the wrong place, I think.
I agree. And I speak to people about the significance of levels and the significance of kind of TA at these points in time as well. And like the way that I always try and phrase it is, I have no idea what is coming in the news, but I do have a certain amount of control over what I can identify from a chart. And from a very basic kind of bullshit TA overview, you always say that basically whatever the news is should be visible in the charts. Right, that's like one of the very basic bullshit overviews of somebody who believes in technical analysis, is that like the outcome should be visible. Like I should be able to determine to some degree. I remember tweeting a chart. It was an equities chart, and it broke. I think it broke out, and it broke out of like a fucking ridiculously long trend line. It was something like a 3-year trend line that price had been capped, and it had this like almighty breakout. And you responded to it because the reason that it broke out was it was basically like a news-driven event. And I remember you tweeting and being like, basically the Twitter intern is waiting to break the 3-year trend line with their tweet about this news. Yeah. I always think about it, it's a relatively decent example, but realistically speaking, what you have power over is what you analyze and assess in the charts and what you can execute based on that, versus the complete unknown in terms of the news world that anything can break out at any time. I've always found that the simple argument for me is I do have control and power over what I see and what I plan and what I execute in terms of the charts, whereas I can't when it comes to the ever-changing fuckfest of crypto.
Amen. And notice those same people never complain when news works in their favor when they're positioned. They might go immediately to their target, or they might get bailed out by some good news when they're in a trade. And for them, when that works out, it's, oh, I had the TA there. Obviously, it's the TA and the news helped. Whereas if they lose, they start blaming the news. Oh, all these extraneous events are adversely affecting my trading style. It's complete cope. It's complete nonsense. And also, I do love, as you mentioned, that example of people who think that markets are like so efficient or TA is so predictive that it basically prices in the news, which is why famously all these mafia bosses and CEOs hire technical analysts to see if any bad news or secret FBI raids are going to happen based on if there's like a divergence or a deviation of resistance or whatever else, right? It's like completely absurd. You get both extremes, right? So people arguing TA doesn't work at all, which is actually, if assessed at its core, is a completely crazy claim to make, because if you take it at face value, the basic premise of TA works is that some prices are stickier than others. That's it. Because when you're talking about does technical analysis work, that's not to say that technical analysis can make everyone profitable. It's not to say that it's predictive in all cases. It's not to say that you can build a full trading system just based off the chart. It doesn't mean any of those things. It simply means we seem to see consistent order herding and order clustering behavior, which manifests in the form that some prices seem to matter more to the market than others. And that's all. That's the basic claim of TA. It's not terribly complicated. And it's certainly much easier to argue that than to argue the contrary, which is to say that markets are completely Brownian, arbitrary at all times, and the flows have no predictive properties whatsoever, and all prices are the same, which I think a basic eye test can refute. And of course, you've got the other end of the spectrum, which is all the guys like whenever crazy insolvencies, FBI raids, Black Swan stuff happens, they'll open their baby pips TradingView non-premium version and say, oh, I knew this was going to happen because it was in the charts. So those are very absurd. At its core, if you're sort of advocating for using some degree of technical trading in your system, it's a very humble claim that, hey, some prices seem to matter more than others, and I'm going to try to model and maybe generate setups and study that so that I can potentially trade them in the future if I see some repeated instances or bouts, whatever it may be. So whenever you see those types of two extremes, that someone hasn't thought to any meaningful degree about this topic, in my opinion, at least.
Yeah, agreed. Yeah, this is a really good example here. And again, this was this hourly kind of bounce region that we had on BTC here, and obviously we're right in the thick of the shit here. But this is another really good area in terms of the divergence. So this was, I can't remember the exact tweet that did this. I'm not sure if it was EZ's tweet that did this originally about potentially looking at the FTX purchase. I think this might have been that point. I'm just quickly scrolling back on my feed. It was Sam's tweet, I think. It might have been Sam's clarification. Let me quickly check. Yeah, it was the announcement. Yeah, it was the announcement on Sam and CZ right after. Okay, yeah. So again, I put here, I was like, wait for the hourly div and then prepare the announcement. And like the announcement basically like drops here, right? So it's another one of those examples. It's like I have an executable trade here, and then obviously then the news follows and allows this to spike up 8% or whatever it does in the next hourly candle. So again, just if you've got like a trading process and system, then you're executing based on still what you're seeing. But yeah, I think we've covered that topic in a lot. Can we look at Sol and see what we see in the charts?
Yeah, certainly.
Sol is the one that someone would like to look at. Do you have any oversight of Sol? Do you know what Sol currently looks like? And do you want to lead with that?
I think the broader context with Sol is beyond purely technical for this specific thing, and that's evident in its weakness. The main issue, of course, it's basically embroiled and entangled in this SBF empire, where he was like an early supporter of the network, and a bunch of the VCs who invested into Sol and have huge bags were also big FTT holders, FTX equity holders, and Serum holders. And so there's a lot of overlap between all of those groups, and all those groups are wrecked. So that certainly adds a ton of supply to the market, and just basically it's a contagion coin, for lack of a better term. And that's, as I said, evidence in its kind of price performance. Purely technically speaking, you'd need to turn on log to see anything that looks remotely like a level. There is like a red weekly candle, and just starting that sentence is very depressing. I have a level at basically $13 thereabouts, and it's basically the only weekly red candle in the entire uptrend ever since Sam told Coin Mamba to fuck off, which of course aged very interestingly for him. And if you look at where that weekly closed relative to the 13-14 handle, that mini consolidation in March, basically, before it made new highs, it firmly closed below that structure. Yeah, that's exactly where it is. And it closed below that structure on the weekly, and you currently have a backside retest of that. So purely on price terms, that's not super attractive, and the whole contagion coin spillover doesn't help either. I think the two options there is if you get a decent looking flip of this weekly structure, because there really isn't much. If we're going to be charitable, then there's something there. If you get a weekly close above maybe 14, 15 or something that basically doesn't look like total garbage at this weekly point of breakdown, there could be a reversion trade available there, purely on technical terms, towards closer to the point of breakdown in the low to mid 20s. Maybe 30 seems a bit of a stretch, but like from one candle structure to the next, there could be something there. Of course, that begs the question that if you're going to be trading Sol for a mean reversion play, surely other stuff looks decent. So why don't you trade the other stuff that's likely going to do better? That's a completely reasonable concern, and you always have to weigh that in your decision making. If I'm going to position to strength, how do I choose my assets through which to express that view? If it's not purely technical, you can look at relative strength and the extent to which they're affected by the contagion, all these other things. So that might not be a super high priority for you, which is fine. But it's either some sort of strength through 15 to hopefully maybe eke out a bearish retest out of this thing before sending it to Hades, or it's got to be around the meme listing price action levels, basically $3 $3-4, tell me all you want and fuck off. The listing structure, so to speak. But yeah, if you're looking for like strength exposure in this market, the most affected, most brutalized coins probably shouldn't be towards the top of your watch list. That said, I love a good comeback story. Like all the friends who are intelligent that I've spoken to about this completely hated my view on this, but I basically said, wouldn't it be a wonderful narrative if, and yeah, they've got like hackathons, which people seem to give a shit about. Out of all the other layer ones, the NFTs on Sol did better than all the rest, and there was some interesting developments there. So there is some seeming stickiness to the community, which isn't the worst thing in the world. And if you take that Rocky Balboa comeback story type of arc, maybe it does nuke, consolidate, look like total shit for a while, but eventually shake off its VC origins and start a new character arc as a still Phoenix type layer one to go up the next bull market. And I'm sorry, if we can fucking send Cardano to $3, then ruling out some sort of comeback on Sol next cycle doesn't seem too unreasonable.
Yeah, I think that was a nice little bit of like hopium injected at the end as well. I feel like that was a good bit. Chat saying copium, I say hopium. I say it's fine. I say things are fine there. But the only thing that I would say, which it's not disagreeing with your point, it's just adding a separate strand to it, is absolutely agree in terms of like the natural kind of DT logic, which goes to if it's fucking absolutely been nuked, then it's going to rally so hard. Right, so I absolutely agree that is not the play to be taking. The only thing that I would say about Sol is if you are looking for a lower time frame trade, it is potentially one of those markets that is heavily shorted. So in terms of like the lower time frame spikes that it may be able to give you, might be relatively juicy. But if you're looking for kind of one of the longer reversion trades or the movement back up over several weeks or so, then I think eyes are probably best fixed elsewhere. But in terms of like lower time frame trading and momentum, it is one of those ones that you should see relatively juicy action on should things start to pick up. And we say that as things are looking obviously pretty grim at the moment.
Yeah,
it's... I mean, there's
trouble, mate, when you've got one red candle as your weekly structure for the market.
Yes, sure.
Like,
so you've got literally
that's when you know.
Yeah, and it's like it's barely red. Like I just took your word for it. I was like, yeah, I'm sure he's looked at it in more detail. So yeah, it's just about red in there, and then we just end up. And again, like the thing that really scares me is like all of these monthly charts. This is what scares the shit out of me. That 50 level is so important to me, and from a trend perspective, it's just continuation. And so the fact that so many of these markets have hit just below the 50, retested the 50 in some cases, and like are only now just turning away from it, that's like a horror based on the current prices that we're at, based on 12 months ago. So yeah, so like the situation we're in is really nasty. And I've forgotten from a perspective of a larger scale correction just how slow the RSI can feel on the monthly chart. When you look at the Sol price, if I was guessing the position of the RSI from looking at a chart that is, let's say, back in August, I would probably already say that the RSI has corrected pretty fucking heavily based on the price action that we've seen just up till July, August. So the fact that we're only just below the 50 level and now we're potentially turning around again is, to me, a really horrible situation. That's
tweet
the
there,
scary
right?
one.
You have to tweet the downtrend is just getting, which in purely technical terms you'd be able to
yes,
argue.
I would get away with. The bait tweet for tonight is the Sol sell-off has just begun.
I mean, thought leadership around Sol was so bad late in the market, like specifically Kyle Samani, like some of his takes on like crypto, like some of these funds are very interesting. That they'll have like interesting perspectives based on like engineering and first principles and network effects when it comes to like blockchain and tech. But their understanding of like crypto market structure is just so fucking appalling that you have to hope that there's someone else at the firm and fund who can like think about these things more meaningfully. So what his famous thing was at the top being like all these billionaires are calling Samanai. Maybe he actually meant they wanted to sell their Sol, which would be helpful given he sold his Sol.
Yeah, context is important. Yeah, we don't
absolutely.
Know.
Yeah, we don't know, but certainly didn't leave it to speculation at that point. However, also, when it comes to some of the other takes where there wouldn't be a bear market, Sol would flip an ETH and all this other stuff, which is like tried and true, just simply unsupported by the evidence when it comes to crypto market cycles. It was disappointing to see a lot of the kind of thought leadership, quote unquote, that carried the market through its bull days, basically just dig their heels when conditions were shifting. And if anything, doubling down about how this time would be different. And you're going to see secular uptrends and secular pumps and all sorts of behavior that simply didn't manifest.
That's the thing that blows my fucking mind every time I think is you gave reference to character described as a baby pips reading non-trading view premium user. And like these people, right, that character type was able to see the fact that the crypto market might not have looked so hot. Like things weren't, they seemed different, right? Downtrending structure maybe developing, maybe they were super basic and they were using RSI and they were saying there's some divergences across the top here. Yet so many millions of dollars went into doubling and tripling down on the way down a horrific bear market downswing. Not only that, coupled with obviously the macro factors that we were entertaining at the same time and the risk markets shitting themselves in general, it still blows my mind how people of supposed intelligence were making those decisions versus the average man on the street who is saying, you know what, 60,000 per Bitcoin seems like a good price to sell for me. It feels like I always struggle to just quite believe the kind of incompetence of people who are making those decisions and the thought process behind it, or if it truly is just the manifestation of greed at that point and just money has become the way that funds are being utilized or whose funds they are utilizing and just become part of the bigger problem.
Yeah, I wish I could read their minds, but I'd probably go insane at the same time. My speculation would be that at a certain point, you start to believe your own bullshit, given how much money you made in a fairly short period of time and how right you were about the market. And also, a lot of the time, you've got like locked investments in these things. And even if you want to do something, you can't. And that puts you in a position where you're A, buying your own bullshit, and B, you can't even meaningfully entertain the contrarian opinion. Because if you were to subscribe to it, you're much more limited in what you could do about it, given your unlock schedules and all the stuff that comes with venture. Greed, obviously, a big part. You've had the life-changing, whatever, couple of years and you assume these conditions are gonna persist. And also the stuff that made you like mega rich, you're going to assume just like any other trader, if something's working, you kind of milk it until it stops working. And a lot of these people aren't trading types. By the time you realize that something has materially shifted, they talk about multi-year horizons and all this other stuff, then you get caught up pretty quickly. And I think the macro environment is also one that made it very tricky. Most of the crypto fund managers and just most of us haven't seen or traded through these kind of very aggressive tightening liquidity constrained conditions. If you were using the previous bull market playbook on this occasion, you had a very rough time. We broke a lot of golden rules when it comes to, it never tested its prior all-time high and downtrend, all this type of stuff. People create these idols and transplant them blindly from previous cycles to this one, and that certainly led to a lot of very dodgy thinking this time around, and we're all paying the price for that. But as you said, I actually agree with you. There's some really basic signals that worked out really well. Like you and I spoke about the 30K breakdown. That's like a multi-month level, and it broke down, okay? And that's about as simple as it gets. Like you might be feeling that it's late at that point because if it breaks below 30K, hey, the top was at 69K. If I sell now, I'm selling more than 50% down, whatever it is, and that seems late to me. Therefore, I won't do it. But something that I've always adhered to is that the price is the price. It doesn't really change where it is or what's going on. If you have those types of meaningful high time frame structure shifts, then you've got to take them seriously and follow them. Also, there's obviously a recency bias attached to that where you think, 30K, that seems very cheap because we were just at 69K. It's like, yes, but in the COVID crash, we're up 10x from that point when you're shitting yourself at 30K. So you kind of have to anchor yourself more meaningfully when you're doing these things, given the volatility of the asset class at hand. And the price is definitely something to stick to. And that's not even to mention the time-based considerations that should apply in your reasoning when it comes to extrapolating where the cycle might be, because that was definitely absent from, I think, a lot of people's decision-making frameworks, that they think the shorter cycle theory was a popular one for whatever reason. And also people just being completely time agnostic and thinking, this is very discounted, I'm going to buy it. Even if you do buy the bottom, and I've tweeted a thread about this, why it may not be as attractive as it may seem. If you buy the bottom, like there's a decently high chance you have to stick through several months at best of Mageddon, but like to the downside where there's no vol at all. That has real impacts on your trade management, opportunity cost of tying up your capital, your mental capital, and the likelihood that you mismanage those positions or sell them early. There's a cost to everything. And I think just a lot of that type of stuff, because of the nature and the way in which the bull market actually formed and continued, we forgot almost the basics when it comes to crypto.
There's also many of those as well. Like we were chatting before about like the 3AC side, and in terms of fooling yourself, everybody used to refer to the psyops of any tweets that came from anybody from 3AC, but like when like everything transpired, like it was like, no, they actually just believed everything that they were tweeting, right? It was just like they were just honestly tweeting about how they were feeling about the market and falling into that classic kind of investor cycle, which again, it still blows my mind that situation unfolds. But there were multiple points, I think, that people started to convince themselves, and like the decorrelation argument is another one that we've spoken about. That was another reason why you may wish to either continue holding crypto or not sell crypto at what seems like a discounted rate now, or or that crypto would hold up better in the macro conditions. Bitcoin's purpose, creation and where it was and the creation reasoning behind it, and, you know, that we should hold up better. Fundamentally, this is something people are going to look at. There are a lot of things that kind of may have forced the mindset slightly.
Oh, yeah.
But
it's a narrative graveyard this year, right?
Yeah, it is.
Bitcoin as an inflation hedge, Bitcoin as a decoupling, stock to flow, digital gold, and debasement hedge. That, by the way, was one of my favorite ones, where the argument initially made was Bitcoin as an inflation hedge, and then inflation comes in as a risk asset, it gets fucking hammered, and they pivot to saying it's a debasement hedge because look how well it did during pandemic times, which is like an absurd argument to make, of course, because then Dogecoin, SafeMoon, GME, AMC, all of that is presumably also a debasement hedge, and then you end up making bedfellows with assets you don't really want to be associated with. So yeah, I think when it comes to those types of narratives, they've aged completely terribly. And I think even like a basic moving average layover on price gave you a better indication of where this thing was going to go, rather than subscribing to all these priests preaching from the altar, so to speak. It's been a really rough time for people who kind of aren't technical. And there's a certain irony that sort of caught me when I was looking at the S&P and looking at the correlations, is that at a time where people are more focused on macro than at any point in crypto's history, the S&P 500 has actually just been very technical. If you're looking at monthly levels and weekly levels and trend, it's been a very, very clean market to trade. And on the correlation side, as much as people were looking at for kind of decoupling relative strength, those signals have also been fairly linear, fairly straightforward as far as trend goes. So you live in this world where you'd almost be better off not thinking and just looking at the price and assuming that your first principles are going to remain intact. And you did much better than people who were arguing against themselves in circles about what's Bitcoin's purpose and is it going to decouple and all this other stuff, which just aged completely terribly. So there's the irony isn't lost on me. On when people are paying the most attention to non-technical stuff, that technical stuff actually offered more signal than ever before.
People are also mentioning the rainbow chart as part of the narrative.
Yeah, people don't know. I think, look, Eric Wall is one of my favorite people, right? And he made the rainbow chart as like a cynical, satirical critique of stock to flow to show how stupid the methodology is. And then people started taking it seriously. And you had like investor presentations where they were including the rainbow chart in like their decks and all this kind of stuff, which is obviously very scary and not something you want to see. By the way, I had a quick sort of passing thought. You talked about the monthly trend as indicated by the RSI and sort of the 50 level and the potential implications. When it comes to ETH structure, one of the things that actually makes me scared is looking at an ETH monthly chart, where the premise is basically if this 1.1k highest monthly close from like 2018 or whatever isn't where the bottom comes in, and just like for Bitcoin, we go fishing for monthly structure in terms of candle structure, support resistance, whatever it may be. It's like, where do we look, like, realistically speaking? Like, for example, I've got like a whatever Binance or Coinbase chart on the ETH monthly. There are two levels with actual candle structure, if we're not talking about like pure inefficiencies or other things like that. On the monthly, that's, as I said, where the market is right now, with the highest close of last cycle at around 1.1k. Then if you want to be charitable, you have the top of the pre-bear market, the top of the bear market rally in 2018 at about 700 to 700, let's say flat 700, 800, depending on your time frame. And then it's basically 50% lower from that, 400 or whatever else. So I think one of the reasons you actually want to see this ETH 1.1k monthly to be defended, and I'm not sure to what effect or to what success, is because there really isn't much below if you're purely focused on candle structure. And again, you don't have to be. There are different ways you can trade it. But if we're going to be consistent in looking at monthly structure for altcoins, for Bitcoin and other things, I think for ETH that there's a lot to be desired if the June low wasn't the low, because there's a real absence of that type of thing. And I'm not just saying that out of context or arbitrarily. We've seen even on Bitcoin monthly or weekly, that type of inefficient price action when the market enters a trending mode, it gets filled, man. The market does find its way to fill those gaps both on low time frames and higher time frames. Like I think Bitcoin on the weekly at around 30k ish is like a really good example of that, and also even at 20k, but even the 30k example, like a lot of those kind of one-sided order flow, just if the market starts to trend in the opposite direction, it definitely finds a home there. And you can find confluence there if you add a volume profile or other things to show you where there is participation and where there isn't. And my concern with ETH higher time frame, if this isn't the low, is Geronimo, where am I supposed to fucking look?
Yeah, I think it's right, and that's the scary part about the monthly charts. It's always the kind of, when everybody says fucking zoom out, it's like it gets scary the further up you go, unfortunately. So again, it's like a summary in terms of people from like a TA perspective. I think the summary here is that the weeklies for the majority are poor. From my perspective, the monthlies are piss poor. And what you've now got is you've got the interim period in which that we've broken down from these major support levels or consolidation regions, and we are at week 2. We are the first week after the candle that has broke through that support level, and we're in kind of a potentially choppy position overall. When you look at the monthly for things like and monthly for BTC is also another one of the kind of golden rules that we've never broken, along with things like closing below the moving averages. The RSI is at the lowest level it's been in like 7 years for BTC. Another one of those kind of like golden things broken, and once again just looks like a full trending market on the monthly to the downside that's just in continuation mode, and the weekly being basically spark to that potential next leg lower from a monthly perspective as well. It's the ETH region. As soon as you started talking about it and I switched to a monthly, I immediately hovered down to the 450s, which is again, yeah, the time you get the red candle. It's like that's the last time there was just a teeny weeny little bit of price action, and below that you're talking 230s and
oh, stop it. I'm not ready to have that discussion. Yeah, but I broadly agree. And thing is, you can certainly end up in some weird places if you use arbitrary timeframes which haven't offered signal in the past, because by definition, if the market starts trending, there may not be candle structure on a certain time frame, and that might lead you to argue erroneously that there is no structure whatsoever. Whereas if you use a more reasonable time frame, there might be a decent kind of volume profile or whatever in that type of area, so you end up misleading yourself. The issue is crypto monthly timeframes have actually been really fucking good this cycle and in general. Like if you look at the Bitcoin 3, 4K bottoms and ETH in the past as well, this isn't like a completely made up arbitrary time frame that hasn't offered signal in the past. If anything, it's been one of the better timeframes for macro kind of position trading, which is why at least it has weight in my system. So in general, like right now, if you talked about it's only been a week and the time component, and I agree completely, but if you're someone who's just like very horny for this market, my question to you is why? So even if you manage to bottom ticket, like you actually, this is the complete Pico bottom today right now and you bottom ticket, like what's the likelihood that the market trades within, let's say, 5% of your entry in the next 4 weeks? I would take those odds any day, right? There's a really high likelihood that whatever bottom tick you get, the market's going to revisit your entry or spend more time there. So there's no urgency to get it right the first time around. And also we know historically that when the market actually puts in a bottom, especially if it's some sort of outsized liquidation wick, there's a really high probability setup that forms on the back of that, where the market will basically backfill the wick that ended up being the bottom. And on lower time frames, you get some sort of higher low, or 3/4 of the wick will get filled before the candle closes start being constructive. And that process can take like weeks, and usually does take weeks and months. And so, you know, if you're feeling rushed that if I don't catch this bottom now, I'll probably never get an entry, that's not the worst reasoning, but it's a reasoning that you apply to trending markets where they're going to move somewhere without you. When it comes to a trend reversal, your timeframes should completely change perspective and be cognizant of the fact that even if the market does reach an inflection point and eventually reverse, there is a very high likelihood that price, whatever it is, going to be sticky and allow you for more than one entry. And so therefore, a lot of the urgency that you feel to get involved straight away on a trend reversal setup is often imaginary as opposed to prerequisite for getting on board them.
Yeah, it's the... I also think it's a really important point that you brought up before, which is about like the capital being locked, even if you're choosing to be an investor at this point in time, right? So like the progression in terms of how long we see consolidation for, whether or not this is the bottom or not, whether or not you have to suffer through potential drawdown in terms of your portfolio. I think they're all really important considerations for somebody who is going through what is probably social media induced FOMO, right, about being a buyer here, or seeing like so many people who are deciding to be a buyer that is potentially edging them towards deciding to invest or put some money away or rebuy, whatever. I think there are also important points to take into consideration, as well as the bottom ticking. So the energy spent on trying to bottom tick this versus the opportunity you will have to not have to bottom tick, but still be able to operate with maybe some sense of normality in your life without 18 hours a day at a chart, plus also then the considerations of the capital tie-up that entails, how long that's going to be there for. It is really like important. And for the majority of people, we know the majority of people probably still have the major tendency to overinvest. So therefore that capital kind of preservation and not getting locked up is even more important, especially when there are many thousands of markets that you can trade and invest in, and not all of them are downtrending. It's like you don't have to continue to stick here just because you're looking to catch this bottom tick in the crypto space.
Yeah. And by definition, I think I would be comfortable positing that most people in crypto who've made money have made a disproportionately large share of that money in an uptrend. Then I would also posit that we're not currently in an uptrend, and therefore I could conclude quite reasonably that maybe you shouldn't be trading because we're not in the types of conditions where historically you've had an edge and performed well. And I think that would apply to, like, by definition, most people listening, watching, reading, or participating in the space right now. But it comes from, I think there's some ego involved, there's some fear involved, and all sorts of other emotions that get entangled. But the basic premise is, like, if you were to look at your P&L and chart your biggest gains and returns relative to the type of environment you were in, we're not in that environment now. So deploying aggressively or acting like you would with your risk parameters in this environment compared to previous cycles or where you actually made money, you simply can't do that. You wouldn't do that under any other ordinary circumstances. If you were printing money in a range bound setup and the market starts trending, even if it's on the hourly 4-hour intraday, you would quite reasonably say the setup that I was deploying for those conditions, if I deploy that now, I will eat shit, therefore I'll be more conservative and or wait for the mean reversing conditions to resume as opposed to the trending conditions. So people, when they're trading lower time frames, are completely fine with using that type of logic and actually adhering to it. But when it comes to market broadly trending and moving lower, for some reason that just completely goes out the window. And I do think ego is a big part of it. No one will feel cool if they buy Bitcoin back above 30K or back above 20K or whatever it may be, especially because at that point social media will be filled with people who've like bottom ticked it or whatever else. But like, newsflash, no one actually makes a disproportionate amount of their P&L by bottom ticking BTC and ETH. Even if you take a cursory overview of what people flex as their biggest wealth creating events of the previous cycle, it wasn't buying Bitcoin at the lows or ETH at the lows or any of those names. It was Sol Luna AVAX, it was NFTs, it was like some other rotation, it was DeFi, it was stuff that happened multiples and multiples after the bottom actually took place.
Yeah, that's why you can expand your point out, like that you made initially, where you said like people, you make the majority of your money in an uptrending environment, and like you can just extrapolate that out to what you've just said there, which is the majority of assets that you probably made the most money up were probably already up 10x on their original pre-COVID amount. The actual where the money was made, where the real kind of like meat on the bone was during that is halfway through, 25% of the way through that bull market, where you start being like, fuck, everything is good and is staying good, and you're at a kind of belief stage now. Finally, you maybe shorted the rallies a few times on the way up, but you're now fully believing and you take advantage of those conditions. But for the majority of people, the simplest thing to do is wait for an uptrending market and then invest your money. That is just the most simple, basic investment advice that I am not giving in a professional sense that you can look for. It's just buy when the market is green and then leave your money in there and then look for some sort of indication that a top might be forming and sell it all. It's very difficult. And the social media side is always something that's fucking plagued me for the longest time, in the way that people, it is absolutely I won't feel good if I buy at this amount, which is such a weird thing, because it's like, it's almost as though at that point your image or ability to flex on social media becomes more important than the money. Like in this weird like moment in your mind where suddenly it's shit, I couldn't possibly share a screenshot of where I bought at 28,000 when these other people are sharing screenshots of where they bought it like 17, assuming that we ran much higher, because it would just feel automatically as though you're somehow not as successful as a trader, or you're making poorer decisions, or you could have got a better price. It's in the last stream, somebody did like a really nice set of quotes from the way that like traders basically just consistently punish themselves. It's just that punishment cycle over and over again. You hit the trade, it plays out perfectly, but you're now pissed off that you didn't double the size on the original trade. It's just this constant, like, you're pissed off every single thing that happens when it comes to trading. There's no good outcome, and it's a really crazy mental situation that we go on. But simple overall advice is like, just wait for nice conditions if you want to fucking sink your money into something again, because not enough people pay attention to the time requirements or the length of time that has to pass for a lot of these structures to develop. So yeah, really important. Someone just mentioned the Futures Open creds. Have you been around while we've done the Futures Open here?
The vote is the mechanism. Yeah.
So we vote, we play a little Skyrim review, little Skyrim music for a minute, just to let the market unfold with some more drama, and yeah, we'll take everybody's vote on which direction they think the first 1 minute candle is going to go. So I'm going to get that established, and obviously we will ask you to participate and give your vote on which
1
way
minute
you think it's
candle.
gonna go.
Okay.
So first 1 minute, yeah. So I'll split the screen now and start preparing for this. We'll start the voting. Oh shit, I've got to start the voting in a second. Actually, we're gonna do it on the Nasdaq as well. So it's always the Nasdaq, and I'll give everybody an overview now. I'm gonna get the poll set up first, and then we will go from there. So let me see here. Okay, so we've got 5 minutes starting now. So everybody is now able to vote on which direction they think the first 1 minute Nasdaq candle is going to open, green or red. Everybody who guesses incorrectly is cursed for the entire trading week. The curse is back. The FTX saga is basically over now. The curse is back. We got to go back to normality. So curse is here. You guess incorrectly, you're going to have a pretty fucked up week. Right? Listen, I want to say anything else. Maybe there's some other big news going to come out, or your trade's going to be on the wrong side of it. You just got to be careful on that side of things. If you get it correct, of course, everything will run perfectly. You have a most wonderful week. You will have doubled down on your position just as the news breaks.
Because it was priced in.
Because it was priced in, because there's a 1 minute trend line break and you knew it. And then everything will play out gloriously. We'll go through the NASDAQ quickly. So this is the current 12-hour picture of the NASDAQ. Let's get rid of the lines here. This is the support on the higher time frames. The 4-hour structure over here. The 1 hour. Let's bounce on Friday to tail off the session. The 15-minute, 5, and finally the 1 minute chart. Yeah, I think we've had, maybe of the last 12 weeks, I think 1 week has been green. And nice. We had 10 weeks in a row of every candle red. So every 1 minute candle for 10 weeks.
It's Bitcoin Weekly in the summer.
Yes, basically.
Wasn't that mad?
Yeah.
You actually lost track of how many consecutive red candles there were. And people still wondering what the trend was.
Yeah. And classically, the voting was exactly like that. Like everyone was voting green. Because it's like, can't happen again. So the voting just turns into contrarian mindset. Even here, it's I announced we've had 5 weeks in a row of red candles. Suddenly the green vote starts shooting up. It's just like everybody just takes the logic of can't possibly happen again then. So whereas like there were people here actively who were like, if it was red last week, it's like if it's been red the last 3 weeks, it's fucked. It's going to be red again. So you had those like true trend followers, even just in the 1 minute Nasdaq weekly open candles. Things were so good here. I was like, there's a trading system in this. Like when I was noticing, I was like, there's a trading system in this. So I think it's probably going max short into the close on a Friday and then just taking profit as soon as the 1 minute candle plays out on the Sunday night. But I was like, there's probably a system in here for me to try and execute on. Yeah, people were saying surely it's green this time. It's over for the bears. Zero chance. So Cred, what do you officially want to pitch for here?
I voted red for no particular reason.
Okay. Listen, you want to make it, add some voodoo on that. It's red because
there's a 1 minute level of resistance there that's really obvious. Yeah. And you can see that it actually tried to break out from it at 9:30. Yeah. Failed breakout, which is bearish. All the institutions with their TWAPs are trapped. They got a bit of a spike at about 9:45 last time, but there wasn't enough time spent at that level for them to offload all their offside positioning. And now this other rally is clearly a lower high, and that wick is a Big Ched's hamburger Maruzubu candle, which is, my fellow candlestick experts will know, is a classic doom candle. And the market was lucky to close when it did, because that's a limit down type of structure. So to me, this is a home run.
People are doubling down. I can see the reds just flying up now. We're over a million. Over a million.
Remember, if I get it wrong, just disregard.
No hedging.
No, in the last 2 hours, I lose all my credibility if I get this 1 minute wrong. Sure. So everything I've said in the last 2 hours, you're free to dismiss it.
That's what Jim last week he guessed, and he was like, "You put a level up here." He's, I think it's going to spike 25 points higher. So he was like, "Put the level in like $25 higher." So I put the level in. As soon as the candle opened, it absolutely puked the downside. It was like 50 points lower as soon as it opened. So everyone in chat just like immediately go, Jim, what's happened? What's going on? So yeah, you're going to get the same. If this goes green to kick things off, number one, the cries of bull market is here will be deafening from the chat. And
Bitcoin to 25K.
Yeah, right? Basically, they're the sort of things that happen on the 1 minute. We zoom in real nice as well, so we can make it seem like it's actually meaningful. Yeah. So we ramp up the drama. So we got about a minute until I will deafen our call and play the music to get everybody pumped for it. What do we finish with here? Let's see the way that things happen. 65% voted red, 35% green, 1.2 million channel points on red, wow. 650k on green, 141 bulls, 237 bears, So quite clearly, and you're voting, like, we were at about 850k, I think, already on the red side. So it's not as though you swayed people.
Bad influence.
I will vote pre this time. I would vote green if I was voting. I think I would go green. So we'll see. You gave me, I didn't believe your analysis of the 1 minute structure.
Nothing new there.
I wasn't believing it. I know it felt, maybe overanalyzed somewhat. So I'm going for a more simple market like green. And Trump's back, so I'm thinking green.
Oh, I've missed the fundamentals.
Yes. Right. So I'll deafen us now, and I'll see you in about a minute's time, minute and a half.
Do it.
All right, I'm back.
I think you should delete the VOD.
No, I think it's like a PvP between me and you. How my editor will now phrase this is going to be. It's worked out wonderfully. And also for everybody,
that's the high of the month, surely.
It could be generational, hopefully. Yeah, I think for everybody, I always say to people, I don't say my vote out loud because I don't want to influence people in terms of the way they're going to spend their very precious channel points here. But everybody doubts that I have 100% strike rate at this over the last 8 months. And so today was the public, of course, I've got 100% strike rate. Look, if I want to call it out, I'll call it out and get it right. So
I'll be the heel for this one.
Yes, yeah, you got to be there. It was all a setup. It was all like, yeah. And people in chat are still like, nah, you're full of shit. There's no way you have 100% strike rate. Yeah, over 8 months? Yeah, okay. Waiting to get paid now, people are saying for you. Yeah. Yeah, so yeah, a big thank you, Cred. I really appreciate you coming on the stream, and I hope that your reintroduction to streaming won't put you off, hopefully coming back in the future to come and speak with me again.
Yeah, I'd love to. No, thank you for having me. Thank you for your audience for tolerating me as well.
No, they've loved it.
The difficult part.
No, they've absolutely loved it. So I think in terms of the information and the quality of information you provide, obviously everybody is incredibly thankful to have you here. And I will, as you are here, also extend thanks for myself personally for the content you put out, but also on behalf of everybody else in this chat that enjoys the material that you provide and continue to provide. It is very helpful for so many people. Also, a wider thank you on behalf of creating and continuing to create, albeit at a slower pace, that content.
Yeah, no, that's terribly kind. And yeah, for anyone who's interested, I've been bricking out more videos. I think there's 3 in the past week or something crazy like that. There's one on updated horizontal sport resistance video. There's one on entry triggers, and one last night on a top-down approach and multi-time frame analysis. There's stuff going on. CBS's streams are all excellent, so you've got that going for you. If you want to do some more learning, I'm still on the grind, as the kids say, 5 years later. And yeah, we thank you for having me, and we look forward, I'm sure both of us, to providing more commentary, color, and entertainment if we should be so lucky.
Yeah, absolutely. So a big thank you to everybody in the stream as well. Thank you for tuning in, whether or not you were here for me, for Cred, or just for both of us together, which would be nice. Big thank you to you guys, and I will be back midweek. This week there will be a midweek stream. There was fuck all happening this week, so there's really no point in continuing to push the same points. So we'll be back, I'll be back midweek with hopefully more of a technical view of the markets, hoping that the price action has given us some room to be able to discuss that in slightly more depth and dive into some of the alts as well. So once again, a big thank you. Have a wonderful rest of the weekend. Enjoy the start to next week, and may your PNL be beautifully green.